and welcome to Not Just Numbers, Honest Conversations with a Financial Advisor and Lawyer. I am Madison Demora, and I'm here with Mike Gary. Mike is a financial advisor and a CFP practitioner and the founder and the CEO of Yardley Wealth Management. He is also an estate planning lawyer, and his law firm is Yardley Estate Planning. Hey, Mike.
Hey, Maddie, how are you?
Great, great. How are you doing today?
Good, good.
Good.
Rainy Tuesday,
Yeah, one day away from our client event. Pretty exciting.
pretty exciting.
All right.
Can't wait
So,
for that.
yes, yes, me too. All right. So today we are going to discuss a article from the Wall Street Journal, and it is titled "Retirees Who Move to Lower Tax States May Not Save as Much as They Think." And this is by Debbie Carlson. Many retirees move to states with no income tax, thinking it will save them money, but other costs often offset the savings. A couple who moved from Indianapolis to Florida found that higher home prices, insurance, and hurricane repairs made the financial benefit of no income tax negligible. The lesson is not to focus solely on income taxes when considering relocation. For retirees, middle income earners are often more affected by property and sales taxes, which can be higher in states without income tax. Insurance costs, especially in areas prone to extreme weather, can also be significant. Financial planning, like Roth conversions, can help reduce tax burdens, and it's important to consider how a state taxes retirement income and estate inheritance. Ultimately, retirees should consider all costs, not just taxes, and use tools to compare cost of living and purchasing power before making a move. All right, Mike, how do you help clients weigh the pros and cons of relocating for tax reasons in retirement?
Yeah, I mean, I think the summary did a good job. Your summary did a good job of explaining that we get a lot of people around here who think about moving somewhere that is a 0% income tax state. Um, and think about the difference in where they live. And we're in Pennsylvania, which has a reasonably low flat state tax, right? It's 3.07%. But we're near New York, New Jersey, Connecticut that all have progressive and higher income tax rates. And so, if you're paying 10 or 12% in your state income tax and another state is offering you 0%, it could be pretty compelling. But I think what really matters is all of the costs that go into it. For years, here in the Northeast, people looked at the Southeast as a inexpensive place to live and with lower tax burden and lower cost of living. And I'm sure that was true for a long time. And what I'm guessing now is now that tens of millions of people have moved there, it's less true. And so you need to pay attention to the state income tax rate, but also think about property taxes, state and local taxes, and other costs and fees. There was a time when the New Jersey cut their income tax rate, but then increased the cost of all their fees because they still want to raise like a similar amount of revenue. And so you really need to look at the whole picture, not just the number. So as the article alluded to, for middle class people, the income tax rate may not be the highest determinant. Now, if you're a hedge fund manager in New York and you make $100 million a year, yes, you'll save a lot of money moving to Florida. But if you are a teacher, maybe you'll save money, maybe you won't. It's more complicated, I think, than people realize. It's not just that number of the state income tax rate.
Yeah. All right. How important is income tax compared to other cost of living factors when choosing a retirement destination?
Yeah, I think it depends. Probably the lower you are on the income scale, the more that those other factors matter more, right? Because you're going to have um, property taxes and property insurance. Like some states, in the Southeast particularly, have been hit hard with a lot of hurricane costs, and it's expensive. to insure because there have been a lot of losses. So I think it really matters where you are on the income tax bracket. And so like the lower your income tax, those other things probably make more sense. And, like with the hedge fund example, if you're making many, many millions, income tax one is probably higher expense or higher cost.
Yep. What planning strategies can retirees use to minimize their state tax burden?
Well, if you are thinking about where you're going to live in the future and it's going to be different from where you live in the present, you should look up how they do things there. And some states tax IRA distributions at the state level and some don't. And so if you are still not retired yet and you're doing maybe and you haven't moved yet, it might make sense to do Roth conversions, get money out of your IRA into your Roth. So to save not only federal taxes in retirement potentially, but state ones too. It's a good thought. I don't think a lot of people realize that it's different. Like if they're not taxed in Pennsylvania, you didn't get the deduction for them, and you take out your IRA or your 401k, it's not a taxable event.
Yep.
Some
So,
places it is.
yeah, yeah. So, on the topic of Roth conversions, can you explain how Roth conversions might reduce long-term tax liability at the state level?
Sure. If you are doing Roth conversions in an area like in Pennsylvania where there's no state income tax, and say you do some every year for a few years, and then you move, if you've pulled, X amount of money out of your IRA, that will reduce the amount of required minimum distributions you need to take from that IRA and has more money that is not taxed in your Roth. And so when you take it out in that other state, it won't be taxed. So, it's interesting thing, right? Where if you're going to move to a place where it's taxed and it's not taxed here, it might make sense to do more Roth conversions. Again, though, that you need to look at the big picture because the difference in the federal tax might be way more than what the state income tax is, right? So you really need to look at your overall situation, what your hope for or plan is, and then try to figure out how to overall reduce your lifetime federal income and state income taxes, like your lifetime taxes that you'll be paying.
Yep. All right. What should retirees know about how states tax Social Security, pensions, and other retirement income?
Yeah, take a look. There are websites out there that show you. And so what I'd say is like if you really want to move somewhere, that's great, but make sure you have the facts, right? So go online and try to figure out how those different things will be taxed. And you still might want to live there. And it still might be a lower cost of living. Might be a great thing, but it's better to know it going, I like the plan. It's better to know what it will be before you make the move. So do a little research, do some homework, and then don't be surprised. The article had people who moved not realizing that property taxes or homeowners insurance might be higher, and they were surprised. One thing is that some states have homestead exemptions where property tax can only go up a certain amount as long as the person is so as long as the owner owns the place. But then when somebody buys the house from them or the property from them, then they can reset to market rates. So if you're looking online, you see, oh, this place is X amount of dollars and the property tax is Y percent or Y dollars. It could be very different if you go and buy it and it's like 5 times what the previous owner paid for it. Your property taxes could go up sharply. That article, it was another uncovered a nice thing that I'm sure most people don't know.
All right. All right. Last question for you here. What can estate and inheritance taxes affect retirement planning, especially for those looking to leave assets to their heirs?
Sure. Like the federal exemption amount now being almost $30 million for a couple doesn't hit a lot of people, right? So a lot of people don't have to plan about that. But some states have inheritance taxes or estate taxes. And so it's just another thing to look at. If you're going to look to move somewhere, take a look. In some states that don't have expensive inheritance or estate taxes might also have higher costs of probate. And so, for example, a lot of people that buy property in Florida use a revocable living trust to avoid probate on their homes or on their bank or brokerage accounts. Um, and so, if you're going to move somewhere that has a different system like that, you have to learn all you can about it.
Yeah. Avoid all those hidden surprises, right?
Yep. Yep. Hey, if you want to go there and you know what it's going to be and you still want to go there, that's great. But you don't want is to get there, unpack and like, wait, it's way more expensive than I thought.
Yep. All right, Mike, great advice. Is there anything else you'd like to add?
No, thank you so much. It was a great topic, Maddie. Really appreciate it.
Awesome. Thank you. Thank you. For more information on Yardley Wealth Management or Yardley Estate Planning, you can visit our website at yardleywealth.net and yardleyestate.net. You can also follow us on socials at Yardley Wealth Management. Don't forget to subscribe to our YouTube channel, Yardley Wealth Management. This podcast has been produced by Madison Demora and Mike Gary with technical and artistic help from Poe Productions.
Wait, they don't have to smash the like button anymore?
No, YouTube took that away. How
Okay.
unfortunate. I know. I'm
People
sorry.
can still press like if they like it. We appreciate it.
Totally.
And anybody wants
Absolutely.
to leave comments or questions on the YouTube channel or any of other socials, love answering those. Thank you.